It's easy to get caught up in the glamour and glitz of success, but what is it that separates winning traders from losing traders? In short, the answer is simple. They're habits. Wealthy traders routinely do the same things over and over, which is why I'm creating this video about successful traders' habits. If you're not yet profitable, it shines a light on a handful of hidden gems that aren't often talked about. So starting from the top, number 1. They make a conscious effort to structure everything they do. They know that routine is a multiplier of either success or failure. External influences don't dictate their day for them. They make a conscious effort to set structure and routine that works for them and their agenda, including routine inside and outside of their trading sessions. You just don't see wealthy traders with a chaotic personality or lifestyle. Much like the image at the bottom below, you can expect a smooth grain curve going into the future when you've got structure and routine on your side. 2. They focus obsessively on efficiency over bottom line profits. It's often overlooked, but efficiency is at the heart of the game, not money. If you aren't effective in how you operate, it will be death by 1,000 cuts. Alternatively, if you are, it's the complete opposite, regardless of your position size. Small wins just add up fast. Be very careful where you focus your time and energy. As per the image below, if you've got 8 units of energy and you focus them all on one area, you're going to reach your goal a hell of a lot quicker. 3. They understand their own personal triggers. Everyone's got different things that make them tick. Wealthy traders know which setups work for them. Perhaps more importantly, they know which triggers are going to give a bad response within themselves whilst they're trading. This is a key trading habit to develop. Understand your triggers and much of the hard work is done. 4. They stake trades in line with value and risk. Wealthy traders understand that trading results are a direct reflection of value. Therefore, how aggressively you trade should be linked to the opportunity on offer. On the flip side, if the opportunity is smaller, then the risk is higher and the stake should be lower. It's totally logical. Just think about it. New traders regularly get this one wrong. They find themselves staking higher to get themselves out of a bad situation. You don't want to do that, as it's a really bad habit to develop. 5. They're extremely aware of their own internal dialogue. Rather than ignoring that inner voice that speaks the truth to you sometimes whilst you're trading, they're fully in tune. How many times have you been in a trading situation where you held onto a position just a bit longer to find out what happened and see where it went, when really, deep down, you knew that it was a bad idea from the start? This is that inner dialogue I'm talking about. 6. Profit's their goal, but not how they gauge their successes. New traders are often baffled by this, but the wealthiest traders are not influenced by the short-term profitability. A good trading habit to develop is to gauge success upon doing the right thing at that point in time, whether it was a good decision, not the financial result linked to that trade. Not every trade is going to be a winner anyway, so rating progress on random distribution of results is quite frankly foolish. 7. They spend the majority of their time assessing instead of actually doing. They don't feel obliged to be opening or closing a position every 2 minutes. It's a bit like that old adage of quality over quantity. Successful traders spend the majority of their time waiting for the opportune setup to execute their trade. Traders don't get paid by the hour, and making money takes seconds in the right situation, so they know that they're far better off focusing their attention on assessing the marketplace, finding the value, instead of feeling as though they have to be doing something constantly. 8. They trade the market, not their perception. This is a massive one because basing your trades upon data and real-time information is the best thing you can do. Gut feeling just isn't a reliable method to take forward into the future, and if you want to stake up and increase the size of your positions, you're not going to do it easily when the whole thing's based on gut feeling. As the saying goes, trade what you see, not what you want to see. 9. They approach each trade the same, regardless of the previous result. If you want steady and consistent results, you need to have a temperament that mirrors that. No matter what happened in the previous trade, you can't let it seep into the next trade. And whilst this sounds a lot easier than it actually is, successful traders know this is a fact, and so they incorporate it into their daily habits. 10. They accept there will be losses every day before they begin. Wholeheartedly accepting this before they begin means they're less likely to react badly when there is a loss. The shock and financial pain is subdued somewhat. Master this trading habit and a lot of the heavy lifting is already done before you even start. Prevention's better than cure, as they say. 11. They avoid the temptation to gamble their way out of a loss. Now, new traders do this every day of the week. They double up on bad positions or let existing ones run just to escape a short-term financial loss. It's got to be the number one way to lose everything. I guarantee you it won't work. Many traders have got the battle scars to prove it too. Don't be tempted. Successful trading isn't gambling. Blind gambling doesn't have any kind of edge to it. 12. They view their losses as the cost of doing business. Every business incurs costs, many before they even sell a thing to their end consumer. So why would trading be any different? Viewing your losses as the cost of admission is a productive way to engage with the markets, quite frankly. Building habitual views like this strengthens your tolerance for financial losses when they do inevitably come. 13. They don't try to find the top or bottom. They act on probabilities. Finding a perfect trade is a surefire way to drive yourself nuts. Wealthy traders don't try and find the highest peak or the lowest trough in market activity. They just play the percentages in the current moment. Thinking that you've got to find the top or the bottom every time is foolish, quite frankly. It would indicate that you can predict the future. And whilst everybody would like to predict the future, winning traders aren't psychic. They just focus on making the correct percentage call at that point in time. 14. They're willing to admit they're wrong and change quickly. Although they're decisive in decision, because they have to be when executing trade, pro traders are flexible at all times. Once the trade's open, lots of things can change, and you're far better off admitting that you're actually wrong sometimes and changing there and then, instead of holding on to a previous thought or decision that doesn't serve you well. Only a fool operates from a position of thinking they know everything. 15. They realise that making money is more important than being right. This is a big one because ego busts the bank for a lot of intelligent people and a lot of intelligent traders out there. Wealthy traders know that they can't be right all the time, and so they don't even try to be. Nobody can be right all the time. So if you've got a big ego, or if you're attached to the idea of being right, then it's going to work against you, and you're going to find things a hell of a lot harder in the markets, no matter what you're trading. So that was the 15 trading habits that wealthy traders express. I hope you found it useful. Please check out another video on this YouTube channel, as there's lots of trading related content.